Once again, congratulations to my guy John on his first live win today in the futures market. That is not easy. Futures investing lesson of the week. You have to learn to love the speed of the downtrend, especially on NASDAQ, because when the market falls, you're going to have an ability to knock out maybe 3 or 4 days worth of gains inside of one trade. Do not fear the speed. If you need practice, practice NASDAQ on a down day. Practice crude report days, which are Wednesdays. Practice the natural gas report. And then once you catch that speed, for those of you that were able to catch Dow today to the upside, if you caught Dow today, put sniper in chat. It will allow you to see the downtrend to be able to profit shorting when the market falls. And then when the market goes back up, you're able to catch that move back to the upside. What I wish I knew from the very beginning is what I talked about earlier. The more you deviate from your system, your plan, your strategy, the quicker you're going to get to financial ruin. Most traders, even professional ones, only last 5 to 7 years. And it's often because of tinkering with system, not because the system broke down, but changing and doing other things. I've told you guys before, you don't see Troy and Rashad, instead of the assets and liabilities shirt, come out with a new shirt every week. There's a system and routine to that. There's a system and routine to how I even put the presentations together and come up with prices. Please put this in chat. Life-changing amounts of money have been built on long-lasting systems. You can argue the iPhone is gradually the same thing. Or let's take my gaming fans. Meta has been creating the same damn game over and over again since 2010 with incremental changes. Guess what that's called? A profitable fucking business. You get too much innovation or too many attempts to change things, things break down. That's how Live gave up some of their market share to 2K. 2K is having some of the same, but also too, you have to realize too, where you can improve to make things better, but systems will lead to life-changing amounts of income and wealth. And let's do chart time real quick. All right, so let's go through 20 stocks real quick, and then, or 10 stocks, and then I'll do 10 futures. So let's take Apple real quick. These are just basic Fibonacci retracements. I'm doing this through Thinkorswim. So the first thing you want to do is start at the all-time high on a 5-year month, right? And don't kill it, don't worry, I won't give our levels. And then go to the very bottom. So the low is 23.59. The top is 145.09. These are the only places I want to buy. 23.6 and 50%. So if it falls in half, I'm going to load here. No, this is not the crystal ball in itself, but this is the third way that I'll use. So this level here is the first place I want to get in. And look, the price is drawn out. 52.27, 84.34. Real estate investors, this seems a lot like when you're buying distressed assets or distressed properties, right? So if the house is 145,000, if it comes down to 84,340 or 52,000, as my dad said, you can always build the equity back into it, right? You can replace drywall, studs, cabinets, etc., right? So let's look at another one. Let's look at Cisco, talked about. And let's go to the 5-year. All-time high, 58, 56, high to low. Here, the two places I would want to buy is here, 35, 34. Guess what? During the recession last year, it came to that damn price, and a 50% price, 43.29. Won't you know? Coca-Cola. So let's go all-time high, and let's say this happened pre-recession. So this will tell you the areas in which you will want to buy, but let's adjust it for now. The only two prices I would want to buy Coca-Cola, 41.92, 48.17. Anything other than that is too high. I know some of you are going to ask about the golden ratio, 61.8. That is not a place in which you should buy. Now, if you're going to hold it for 10 years, great. I know most people don't have the actual courage or chutzpah to actually hold for that long. Therefore, don't do it. But 61.8 you should use as a target. Let's look at GE. GE, the high is 33 bucks. The low is 548. Don't like GE. Nevertheless, this would be the price, $12.15, what you want to buy. It's currently at $13.19. Don't like it. I think GE is trash. That will not change. Great company, but horrible stock. Johnson & Johnson, the high is 173.65. If I go from top to bottom, I can then see the two areas I want to buy Johnson & Johnson, 124.46 and 141, right? Let's look at one of my favorites, McDonald's. All-time high. Kudos to the stock club members that got into it last year. The bottom is 110.33. So the two areas I want to buy McDonald's, 140.57, 174.41. Now, for those of you who talk about highs or resistance, so this is the high up here, this red area. McDonald's is at 232.90. Is it too high to buy at this price or no? When it's squeezing towards these tops like this, that's not where you want to make your first entry. We want to buy assets that go up at a discount. You're paying super premium retail right now. I don't want you to do that. And let's do the same thing. Let's look at Dow. So if we look at Dow, the all-time high was 35,000. This is the Dow future. You can't hold Dow futures for long term, but for same practice, right? So when the market was falling apart last year, and I had these levels plotted, when it got to the 21,610 area and 26,251, this is when I would load the boat on long-term assets. So when I see the Dow is sliding down and it breaks and drops 50% below, and it cuts in half, those are the areas in which I will look to then begin to buy. Let's look at gold and do the same thing. The high of gold was in 2020. Let's go top to bottom. So if I was looking long term, I would want to buy gold if it got to this price or this price. Here's a super tip for everyone here. If you cannot look at a chart and understand where to buy in 10 seconds, you do not have a simple enough system to be able to dominate in the marketplace. That's the other hidden secret. You have to be able to pull up anything on earth and instantly be able to know where to get in. So if we look at ADX, Adams Diversified Equity Fund, I don't think that they're going to be incredibly dominant. Kudos to everyone who works there. But I know for sure, if I'm doing a quick glance based on this 5-year high, I don't want to touch the 1245 or 1493. And I would argue 1493 is too high because if the stock is below 50, I would lean on this 23.6 and buy it at 1245. And this applies to every single stock, investment class, or crypto that there is. Execute. I've taught you everything that you need to know and some. Let's look at GBTC real quick. Great. The high was 58.22. Homework for tonight. I need you to go Google what is the reason why Grayscale Bitcoin Trust is falling apart. Okay, great. Hit the highs. That's why I say don't chase highs. Don't listen to the noise. Everyone's always going to go to the moon anyway. Ian doesn't know. Great. Dropped half of its value. Guess what? Everyone who's in Grayscale who got in at 45 and 51, guess what they're doing right now? Crying. 29.45 or 14.26 are the two places that I would want to only touch it. And this has come up before. I've kind of earned my reputation on one of these. Tilray. I had people shorting at 279. People still ask me, what do you think about Tilray? I still do not at the moment think Tilray is a good investment. Okay, great. You can see why. Assets that move to the downside continue to do so for a long period of time. So once it got below 151.93, knew it was in trouble, and you can see. Now, did it bounce from 243 and then went up to 64.51? Yes. But if since 2017 it hasn't even broken out of the first quarter level, it's not a good investment. It hasn't even gained half of its value since it fell apart. Stay away from pump and dumps. The only two areas I would be looking to buy long term is 23.6 and 50%. And that's it. You can do whatever you want to do. But if you're looking to build wealth or have riches, you have to execute a plan. Don't deviate from it, and buy quality assets at deep discounts. And 50% off is a deep discount for a quality company. Last gem, if you have to ask, is it a good company? It's usually trash. So I'm gonna go on the record. Tilray is trash. Will be for a couple years. If my stance changes based on the fundamentals, I'll tell you that. But Tilray is not a good company right now. I know it's at 1737, but pretty damn far from this all-time high 300 and hasn't got back to 151. 50% off if it's quality only, or the 23.6, and you'll be good. Love you.